ready to take your investment game to the next level? Introducing Digital Investor, your ultimate guide to mastering the digital marketplace. Whether you're a seasoned pro or just starting out, Digital Investor brings you cutting-edge game theoretical strategies, expert insights, and real-time tips and tactics to analyze, evaluate, invest, and grow your wealth. Don't miss out on the digital revolution. Visit www.nickblacknex.com and start your journey with Digital Investor today.
Bam. Let's see. Well, plenty to talk about, including some shenanigans over at Sui, not Sui, but Sui Land. Sell it anyway. So we'll talk about the German government. They lost. What a bunch of losers. Turns out the Germans are losers again. They lost a lot of money. Remember when they're really vocal, like, we will sell the Bitcoin. Bitcoin is worthless to us. Blah, blah, blah. Remember all that German snark? Well, that cost the Germans about $2.3 billion because they're so smart. They're such geniuses. So I guess the taxpayers. Oh, also what was it? The state of Wyoming, their pension plan. Is it Wyoming? Pension plan or Wisconsin? One of the W's that no one goes to because it's cold and terrible. They sold all their Bitcoin. They're like, we made a profit. Like, yeah, well, you lost like 30%. Again, for your pensioners, for your investors, because you're so smart. You timed the Bitcoin market. These people are such jackasses, man. Like, just so freaking foolish. But anyway, go on. Keep timing the market. Keep listening to the TA guys with 14 cents in their back pocket telling you on Twitter what you should be doing. These dudes managing money are pathetic. These people like managing these pension funds, I've not met a smart one yet. Not one. Not fucking one. And I've met a lot of these dudes. And I always go into it, you know what? Empty. My glass is empty, hat in my hand, very respectful. Hey, tell me about money. These dudes don't know anything. They're idiots. They're salespeople that got promoted and now they're running hedge funds. And well, not mostly not hedge funds. Sometimes most hedge fund people have something they did. Maybe it was in their early days when they worked at Goldman Sachs or something like that before they got fired for drug abuse or whatever. But these guys that run pension funds, they're just salesmen that graduated or were appointed. Now you run a fund. What do you know about finance? Oh, I have a degree. I have a degree from Brookstone University in Tennessee. What the fuck do you know about money? Well, I have a degree. I learned all my things. I learned Keynesian economics. I read all of Bernanke's statements. And I read Atlas Shrugged one time. Oh, okay, got it. So you got all that libertarian stuff just wrapped up, huh? All right. Like, it's bad, man. People managing money it's bad. Bad. I have a buddy who's a wealth manager at Chase. And he's a nice guy. But I would not give him $14. He is not a competent steward of your currencies. So it's bad out there, man. It's bad out there. In Stark we trust. Stark Industries. All right. So we'll get into it. We're going to talk about the crypto czar, the Caesar. Czar is still funny. Why don't they just call him Crypto Caesar? I thought czars were things you had in Russia and like Eastern European countries. I don't even know Americans had czars. How do we have a czar, crypto czar? That's some made up shit. Anyway, he says the stablecoin bill is going to pass, which is a big deal. That stablecoin bill passing is a big deal. It's going to bring a lot of money from the sidelines in. It's going to stipulate what companies can and can't do in and around the stablecoin space. Basically, stablecoins are going to be the biggest buyer of U.S. treasuries, probably outpacing banks and things like that pretty quickly. Well, I don't know how quickly, but I think that will happen. I think that there'll be hundreds of billions, if not some trillions of dollars in stablecoins sloshing around, owning mostly U.S. treasuries, short-term, on-the-run treasuries. We'll talk about that. Ray Dalio, billionaire, I might add, billionaire Ray Dalio, says that the Fed should not cut rates yet because it's a race to zero. I haven't read his stuff, but we'll read it. We'll absorb it together. We're gonna get Dalio together, and then the SUI based. No, it wasn't SUI. Get it right, Joseph. Don't be spreading bull smoke. It was not SUI that got hacked. Nothing happened to SUI. There's the CEDIS protocol, which is a lending platform, kind of a hack job version of Morpho. Anyway, it got nuked, but it may or may not be an inside job. The team there is a little bit sus, and by a little bit I mean a lot. They've been involved in a sketch project before, so I mean this may just be them stealing from themselves. Oh, we got a bug in the system, and they suspended everything. Wait, what did you do? You were in the SUI USDC liquidity pool. I tell you guys, don't mess with that shit. Just hold the asset. You don't need the extra 2 or 3%. You'll get something back out of it, Drooks. You'll get something. I don't know, because as far as I was understanding, it was it'll be in the article, the pools that got hit the most, but it was, I thought they were draining Ethereum and like a wrapped Bitcoin or something. I don't know. We'll look at the article in a second. Anyway, yeah, SUI did not get hacked. This sketch lending protocol that, you borrowed against it. Well, if you borrowed against it, you may also you have the money that you borrowed, right? If you have the money that you borrowed, at least you have that. If you did that. Let's see. Yeah. Okay. So there we are. All right. Let's, let me make a little adjustment here. Okay. Why don't we, by the way, we closed out 2 more. Well, let's see, since the last time we talked. Since yesterday, we closed 2 or 3. You know what? I got to look. There's new options positions up that were closed. So yesterday, we opened, the day before we opened some positions. Yesterday, a close. We closed out 4 positions yesterday. We closed out, all of our IBIT positions. Delicious. So, some of those were yesterday. Hold on. Is that date right? Oh, no. One of them was, guess we bounced out of all those. It says today, but I thought that was yesterday. Anyway, point is, we bounced out of some IBIT stuff. That'll be in the back end in the dashboard. You guys can go where it says all the Bitcoin stuff, the options trading stuff. There's also a section now for Ethereum trading through ETH, where there's some fat ass premiums, but there's also there's a huge gap, a huge spread. The bid ask spread on these things is massive. So you gotta be careful about that. I would not urge anybody to run right into that. But anyway, there's some closes in the, if you go to the back end, if you're a digital investor or digital private client, go to the back end, you can see what those closes were. Well, if you're a digital private client, you already know, because I told you as it was happening. Okay, Chris asks, is selling calls or selling puts more profitable, or are they equally profitable? Well, selling calls gives you a little bit of extra upside if Bitcoin is going up. Selling puts, you're really not gonna get any kind of upside. I mean, you're obviously much more liquid if you're in puts because you're in cash all the time. You're just sitting in a pile of cash. I would love the call side if there was some marginability. And I mean, you could build a whole strategy. I can't do it. Maybe I could over on Interactive Brokers. I just got to look around and see if it makes sense. But let's say, and we talked about this the other day, but let's say you got 50% loan to value. So your $1,000 was really, or your $10,000 was really 15,000, right? So then what you could do is you could do a buy right where you buy, 300 shares of, let's say you need 18,000, but you bought 300 shares of IBIT. But you borrowed, one of those is on borrowed money, right? So on the borrowed money one, you sell one contract deep in the money that you're going to get whacked out of. All you care about there is the time decay. And then you sell two at or a little bit above the money. And then you can capture some of the upside if you assume that there's going to be upside in the price of Bitcoin, right? I like being on the cash side. So the way I express my enthusiasm is how deep into the money in the puts I'm willing to sell. And if I get it wrong, be stuck and roll those contracts sideways for a few weeks or several weeks or months trying to catch up. Like if there was a big sell-off, right? If you're on the call side and there's a big sell-off, you just keep selling calls. I mean, the price will be way down and you're going to get dust for them. And you would also move laterally on, you would look at your strike price that you got in on and where you had been selling, what your dollar cost average price is, and you would just keep selling, but you might move sideways in time also. Go 1 week out, 1 week out, 1 week out, whatever, until you find contracts that make sense. So, but the game changer would be if you had some leverage you could put on, which again, I don't want anybody to do this. I'm just saying, if you really have a firm grasp of this, then you could put on some leverage, but sell so deep in the money, like 10% in the money, because it's unlikely in the next week that Bitcoin will be 99,000 again. It's not impossible. It was 102 earlier this week, but it's not likely. So you could do something like that where it's just guaranteed money and you're just basically milking a little time decay, but it's time decay that you're milking for free because it's time decay you're getting on a contract you never should have had because you never should have owned it in the first place. If that makes sense. I know it's a lot. It's a heady subject. It's so simple, it's complex. It's easy to be okay at it. It's not easy to be good at it. Oh, by the way, before we get into the news and stuff, and obviously on Tuesdays and Thursdays, office hours is more really focused on your guys' questions rather than my musings. But I think, well, let's see. I mean, is Sui really getting beat up that bad? Let's see. Whoa, let's see. That's not bad. That's not bad. If that's current, let's see. Let's give it a reset. Yeah, that's not bad. 390. Considering what happened, that ain't nothing. Okay, Let me go back here. It's a cleaner screen. Kind of an update on the option stuff. So you guys know we were doing these pools. We were trying to set up these pools like a family fund, and I set up this family fund and we're going to fund it and all this kind of stuff. I decided just based on some exogenous things, I'm going to restructure that a little bit. So yeah, I'm going to restructure that. I'll let people know. I'm trying to wrap my mind around something about, like, Brandon and I maybe setting up a pool and having a proxy token against the pool, or like an NFT. We had thought about this before, but we weren't sure about the legality of it. Anyway, GPT says it's not illegal. Anyway, we're looking at it. We're looking at different ways to kind of make the option stuff more available for people that don't want to be meddling in and out. So anyway, we'll keep you posted. Oh, but I told my real estate guys, I told them that the old 2 and 20 deal was off. If they give me money, I'll take it. I'll spin it up for them in the options market, and it's even split. I'm taking half the profit. Period. Full stop. No questions asked, baby. If I'm doing the work, I deserve the spoils, or at least half of them. All right. Let's see. Let me see where we are. Okay, so we got that one. Another options question. Are the strike price option premiums the same? And all? Yes. They're the same because it's not based on the platform. Now, if there's some extended hours trading stuff going on, because these don't really trade in extended hours, that's being run by those exchanges. But the normal trading day for these assets, that is all. It's think of your whatever your platform is, whether it's Fidelity or E-Trade or whatever. You're just using that to view what the market prices are. These aren't their prices. These are the market prices. You're just getting access to that market. All right. Question. Do you have any words of wisdom for those of us that have never been in a crypto bull market and don't know what to really expect? Well, it's better than a bear market, only it's harder to spend. It's harder to invest, because when you want to put money in the market, you're always worried, like, well, wait a minute, what if it goes down? Because you keep thinking, like, when it's in the doldrums, it's very easy to invest. You look at projects that you think make sense, that are cool, that you can wrap your mind around, that you could explain to grandma or like to a golden retriever, and you buy them and you wait. Again, that's speculation. In an up market, there's a lot of FOMO. Well, there's also FIAMO. Do you guys know what FIAMO is? It's the fear I already missed out. I think in Bitcoin, I read a funny article about that. In the Bitcoin space right now, we are in a state of FIAMO. For instance, give me comments. What do you guys think? Do you guys look at Bitcoin now and go, I'm not buying Bitcoin at 110,000 or 111,000? No effing way. Do you guys have some FIAMO? Imagine retail, the six-pack trader, the dude that works at the bar, the Uber driver. You think they're buying Bitcoin now? No. In their mind, they missed it. Unit bias. No one wants to be like, oh, I own 0.0000036 Bitcoin. Like, what is that? I own 36 Satoshis. What is it? What does that even mean? That's like 4 cents. No one wants to own a weird decimal of something. It just doesn't seem cool. So that gets back to the decimalization question we talked about yesterday, this idea of moving the decimal up. And by the way, there's a couple of articles out there and they have their math wrong. If you take 21 million and multiply it by 100 million, which is how many units, each Bitcoin can be divisible into 100 million individual units, currently called Satoshis or sats. So it's stacking sats. So if you converted those all the way out, you would have 2.1 quadrillion, not 21 quadrillion, 2.1 quadrillion units. Okay. And you think, well, that's a lot of units. It indeed doesn't sound as scarce. No. No, it doesn't. And then could you keep moving decimals over? Sure. If you had $100 million Bitcoin and each Satoshi was $1, you might be cool. But what happens when you got to $1 billion Bitcoin? Oh my God, now a Satoshi's $10. Move the decimal over one. Okay, now a Satoshi's $1 again. We just added another decimal. Now we have 21 quadrillion Bitcoin. You see what I'm saying? This stuff is all illusory. But I don't think they will change this whole unit. I don't think they're going to redecimalize this BIP 177 or whatever, because I don't think they want it to get watered down and murky and Bitcoin look like some, crappy effing meme coin. So, yeah. Anyway, yeah, what to expect? When you're on a swing and you get to the high point of the swing, just imagine it sits there. It stays right there. And you're just like, the whole time. When is it going to go down? Nope. What do you mean nope? Nope. And then when it comes down, you go, oh man, I should have freaking sold. I should have done this. I should have done that. Oh, but I didn't. And you start second guessing. You don't do any of that second guessing. None of that occurs in a bear market. I just don't know that bear markets are going to look the way bear markets used to look. I mean, in general, there are business cycles and there are credit cycles, and that's going to affect these markets. But we're in a place right now where there's a lot of institutional money ramping into the space, and especially when we'll get to this Genius Act thing, genius. When that comes, that's a lot of money on the sidelines, man. Like over $2 trillion that's probably going to matriculate into the space. I think that's a lot. All right. Is there still a proposed hypercycle node factory pool in the works where both Base and Ethereum node factories will be sent to? Yeah, they're working on all that stuff. They don't want to cut anybody off. They're going to, oh, that's good. That's a good purchase. They're not cutting anybody off. Everybody gets to participate. All right. Howard, you have SUI in your native staking with OKX earn right from my SUI wallet. Do you think that's safe? I don't know, man. If it's from your wallet, well, it depends. Did you give them voting rights to your tokens, which is a form of staking, like this offering the stake pool representatives voting rights, which again has to do with block promotion? Or did you send your tokens? Are they locked up? Is there a thawing period? Like, what's going on there? I don't know. I don't know anything about how OKXE earn, but what are you earning? 6% or something? I just don't know if that stuff's worth it. But I mean, I guess if you're just sitting there, why not? Okay. What is the minimum dollars needed to get started in IBIT puts? You need enough money, currency units, to purchase 100 shares. So currently, the price of IBIT is $63.22. Therefore, you need $6,322. That would be one contract. And you're in. You're in like Flynn. Why is this thing not updating? Update. Oh, God damn it. All right. It's frustrating. Frustrating. All right. Yeah, people should be stacking sats. It's still, this unit bias, this FIAMO stuff, that's for people that don't understand the benefit of, percent return. It doesn't matter what an asset does. It doesn't matter how expensive it gets. It is the percent of return greater than your portfolio was before, and hopefully on top of the kind of inflation or debasement rate, whatever that really is, because they print money at night. You know how it is. Okay, let's see. Texas Bitcoin Reserve will be signed soon. God, that would be cool. Wouldn't that be cool? Texas? I hope Texas does it. Then they can have tournaments. Texas hodl them. Hold them. Get it? Hold them. Texas hodl them. Anyway, you're welcome. You're welcome. You can use that. Let's see. Hypercycle has a program called HMS. Hypercycle. Yeah. Okay. Is it safe to purchase Ethereum A puts? Do they have enough liquidity? Okay. First of all, no. No, don't buy these things. That's not the way that this should be played. If you're going to do anything, you're going to sell out of the money puts. The spreads are massive. There's not a lot of liquidity. It will grow. Every day that Ethereum has a great performance, it probably gets more interesting to people. And the premiums are, if you can work your way around the big spreads, the premiums are pretty good compared to the price of the asset. Because think about this. It's $63 for a share of IBIT. Okay. It's $20 and a quarter for a share of ETH. So if you believe both of these things will grow in price or stay the same, then you say, okay, where do I get more bang for my buck? So you look at the premiums that are being offered on ETH, and they might be 30 or 40 cents. Let's say a week out. Matter of fact, we don't have to speculate. Let's go. Here they are. Let me get a little refresh so we know we're right. Yes, that's correct. So this will give you an idea. These are the puts right now. The God, that thing lost 85 cents. Anybody who sold the 1950s got rich. That's 85 cents on 19 bucks. Anyway, what you do is you look at the premium compared to the price. So the premium, let's go a week out. Okay, let's look at next week. So you're looking, currently the price is 20 and a quarter. So at the money is 75 cents, 85 cents. One click, one strike out of the money. But you think, okay, it takes more. It's more than three, because you divide the price per share of ETH into the price per share of IBIT. That gets your multiplier. So it's about 3.1, 3.15, okay, to 1. Meaning, in your mind, you look at this premium at the money and you say, okay, at the money, Ethereum, the ETH is 3.1 times 75 to 85 cents. Look at that. That spread's big, so you're probably going to get filled in the bottom end of it. So let's say 75 cents. So, okay, a little bit over 3 times 75 cents. So 75, 2 and a quarter, 2.40, $2.40, $2.35. So $2.35 for at the money. And you say, okay, let me look at IBIT. What does IBIT look like for the same week? Let's go out May 30th. Same thing. What does IBIT look like? So remember, we were at 245, right? Now that same at the money for next week, if you were, apples to apples, is $1.75. So again, you're at, you're still 50 cents, 60, 70, almost 70 cents less per contract. That's in your mind. That's the way you think about it. The other benefit, the other benefit to ETH is the barrier to entry is less, because at 19 bucks, at 20 bucks a share with $2,000, you can sell this contract. With 2,000 bucks, you can sell it. With 1,850 bucks, you can sell this one. With 1,900 bucks, you can sell this one. Why? Because it's 100 times the share price. One contract is 100. Does that make sense? So you can go out of the money, say, okay, I'm going to go to May. I'm going to go look at that 1,850. To be 7.5% out of the money, 7.5% out, that's a lot. And you're getting paid 25 to 35 cents. Let's say you can get 30 cents. So you're getting 30 cents on that. You got to times it by 3.1. So you're getting almost $1. Almost $1 to be 7% out of the money. Go back to IBIT. Okay. Well, we know what 10% would be $6, right? So if we go 4.5, that's going to get us 1, 2, 3, 4.5. You're getting 33 cents on those. 33 cents versus $1. So you're getting 3x. You're kind of getting 3x the premium for the same amount of money spent. Now, is Ethereum much more volatile? Yes. Is there a good chance that sucker could cut right back down? Absolutely. So you're getting paid for that, and the spreads are huge. It's not easy to get in, and it's even harder to get out. You really have to have your shit together to do this. Yeah, just go slow, go very slow. I do not. I indirectly do it. I think I have my SUI over at Power Piggy, and I get my little 3 or 4. I think it's 4%. What does Power Piggy pay? Let me look it up. Power Piggy pays. It's so stupid, but I like saying it. It makes you feel good. Power Piggy. Power Piggy is. Oh, they don't call it. They just call it Earn now. It used to be called Power Piggy. It's paying 4%. So 4% to not be jammed up in some platform. I'm okay with that. Yeah, I'm okay with that. I mean, as far as there's no lockup, you can just take your tokens and walk. You got to hope that the whole exchange doesn't get pilfered, but whatever. Let's see. It's not safe to buy any puts. Yeah, listen, I don't want anybody. Well, you do whatever you want. I don't think anybody should be a buyer of options. That is junk gambling. It just is. Oh, well, I have a strategy. I do an iron condor. Right? It's all bullshit. You're gambling. Options have an endpoint. They have an expiration and a price at expiration. And mostly that price is zero. Zero. All these contracts you're seeing, 93% of these will be worthless. Worthless. Zero. You hear me? You hear what I'm saying? Zero. So do you want to be buying something that has a 93% chance of being zero? Or do you want to be selling something that has a 93% chance of being zero? You're getting money for something. People are paying you for milk that's already on the spoil. It's about to be cheese and curds. I don't even know what curds are. It's about to be curds and cheese in a box, undrinkable crap. And they're going to pay you for it. And it's a lot. So be an insurance salesman. Sell. Sell calls, sell puts. Use it to lower the cost, the price that you purchase an asset, right? Use it to lower your dollar cost price. And, just be the insurance company. Be the casino. All right. Just set limit orders weekly for BTC with the lowest price I can expect it to be. Yeah, that's good. You could also purchase IBIT and sell calls against it and forcibly lower your price. That's another way. Okay. Mining, let's see. Mining AI is much simpler. All you need is fast storage. Yeah. There's all sorts of things. There's all sorts of things you can do to make money, right? If it works for you, that is great. There's no one correct path. Can you explain at the money? Yes. But you can work your way through it logically. At the money is what a strike price that's equal to the current price of the asset. So right now, at the money is that closest contract, the 63, because for IBIT, because it's $63.28. That's the closest contract. That's at the money. In the money on the call side would be $63 or less. Out of the money would be $64 or more. And then on the put side, 63 or less. Out of the money, 64 or more. In the money, because remember, it's the flip-flop. This is the price that they would put you and make you buy the underlying asset. All right. Let's see. Why can I see comments on the stream and the video that are not in the chat stream? Because I don't know. I'm not sure. Howard, you may have some special vision that that the rest of us don't have yet. You may have gained some kind of insight into the universe that we mere mortals don't yet have. Who amongst us is wise enough to know? All right. I did something stupid the first time. I bought ETH A calls. Price 36, price for 7 months. What should I do then? It was my first call. Wait. You're speculating on the. I don't know what to tell you to do. I don't know. I don't speculate on any of this shit. If you bought ETH A at 30, if you bought the 36s, I mean, do you think Ethereum is going to almost double from here in the next 7 months? I don't know. That's a lot of gambling. I mean, that's a lot of gambling. That's way out. Hopefully they were cheap because they were way out of the money like that. I mean, they should be. Anyway, yeah. Whew. Oh yeah, old James with the screaming. All right, let me make sure. Okay, question. When I sell puts at a trading price, I just set my mind and wait for that trading price to go down. What do you mean? When you set a limit order, that's what you're talking about, right? A limit order. Because when you're selling, you're opening the position, you're setting a price, a limit order that you will accept this amount. You're selling those puts. And by selling that, you're selling someone else the right to push you into the asset. So to lock up the amount of money necessary. So when you're selling at a specific price, you're setting your mind and waiting for that price to go, well, you're waiting for time to expire. If the price goes down, that's great also. But if nothing else changes and the time simply keeps clicking off, you still make money because every day is money because of time decay. You're harvesting time decay. All right, let's cruise over here and let's talk about the Germans, the German government. Let's see, our friends, the Germans, they lost $2.3 billion, their smug, snooty asses. They lost $2.3 billion by selling Bitcoin quite contently at 57,000. And everybody, almost everybody was like, you guys are fucking idiots. And they were like, we are Germans, we are politicians, we know about money. Look at our economy. It is in this toilet. Yeah, it is in the toilet. You guys don't know shit about money. Anyway, German government sold its Bitcoin stash in the summer of 2024 very vocally and on open markets instead of OTC. They did this. The fucking Germans did this to crash the market. So what I got to say is to them is fuck you. Fuck you and your whole fucking stupid regime. This is what you guys get. These signaling assholes. They're gonna tell the rest of the world, this is what we think of you, motherfucker. These people they're so scummy. They're so fucking scummy. This whole group, all these, I mean, it's kind of all politicians. You just want to choke them all out, slap the shit out of them, but you can't. You go to jail for it. Anyway, the geniuses at the German government sold their stash vocally on open markets instead of through an OTC, which they could have, but they chose not to because they wanted to show us. They wanted to let us know that they're the smart ones. They'll have the last laugh. Okay. How's that going? How's that last laugh treating you, Germany? They lost or they missed out, and this was yesterday. It's more now. Probably about $2.5 billion lost. Billion gone. See you later. Bye. Oh, I'm sure that the people on the German worker, I'm sure they're happy. They're glad. They couldn't have used an extra $2.3 billion. Remember, that's not the United States, where that's like 14 minutes worth of spending. In Germany, that could put food on everyone's plate for like a month, like the whole country. It's a tiny, anyway. The German government missed out on closing in on $2.5 billion worth of Bitcoin profit after vocally selling its holdings in 2024. The German government BKA labeled cryptocurrency wallets sold 49,858 Bitcoin, which is currently priced at 111,306 per token, worth over 2.89 billion at an average price of 57,900 across multiple transactions, which they were they were telling everyone, they were signaling, look what we're doing. Look, everyone, the decision to sell the Bitcoin cost the German government close to $2.5 billion. If they had held it, their Bitcoin would now be worth well over $5.25 billion, Arkham said in a May 19th post, posting that Bitcoin has risen more than 80% since the genius German sale. At the time of publication, Bitcoin was trading at more than 104,000. This was, by the way, this was just a few days ago. It's already over 111. Dude, these guys, oh God. And what was so great is Justin Sun offered to buy the German government's Bitcoin. Of course, he runs a money printer too. He's a corrupt individual. I mean, he's a crook. But you know what? He seems like a cool guy. He's a cool crook. He's a cool crook. He's a counterfeiter. I mean, he is a counterfeiter and a plagiarist. But I don't think he's a thief. Anyway, he got to have dinner with Trump last night. I know that. And it only cost him $90 million. That doesn't matter. It's not his money. It's money that he printed out of thin air with the help of Tether. Anyway, he had offered the Germans, and this is how you know the Germans were doing this just to put a big FU to the crypto community. He offered to buy the German Bitcoin stack to minimize the market impact, but the Germans said no. We want this to be a spectacle. The German government labeled wallet first raised speculation of potential sell-off on June 19th, 2024, when it executed a 6,500 BTC transfer worth over $425 million. The wallet originally held around 50,000 Bitcoin, believed to have been seized from the operators of Movie 2K, which is a now defunct pirate film site. The German government rushed the sale to maximize liquidity and to forcibly punish the crypto market. They were actively telling us they were going to do it. They told everybody in the crypto space, fuck you, you're an idiot. That's basically what they did. They did that to us. Weird, isn't it? Schadenfreude. I wonder where this word comes from. The wallet's selling patterns point to hasty transactions that weren't optimized for the smallest market impact. They didn't take advantage of OTC desks. They didn't take advantage of best profitability. They just sold fast as they could, like a bunch of dumbass politicians will, because they don't know fucking shit about math. They don't know math. That's why their economy is in deep recession, in the fucking toilet, because their economists don't know shit about math. The last thing that this is coming from the guy at Cointelegraph, the last thing I would have expected is that they would just go to 5 different exchanges and start market selling like some rank amateurs that have 14 minutes in the crypto space. The fact that they're going to so many different exchanges just reads like they're trying to get as much liquidity from each order as possible, and they don't understand the crypto space, and they don't understand economics. Yeah. I mean, and they lost. So what a bunch of jackasses. Good job, Germany. You failed again. Hey, chalk that one up as another historic loss. You guys are stacking them. We're stacking sats. They're stacking losses. Okay. Crypto czar David Sachs. David Sachs. That's a cool name. What's up, Sachs? Not much, guy. That's probably, I bet he talks like, hey, guy. He probably says that. David Sachs says stablecoin bill is going to pass. He's sure of it. Trump advisor David Sachs and crypto czar says that the Genius Act will pass the Senate with bipartisan support, potentially unlocking trillions in demand for U.S. treasuries. So don't get it twisted. The only reason this is going through is because it's a big pump on the treasury market. It's more forced buying of treasuries, right? At a time when the U.S. government prints up so much money that these things should be worth dust. But as we know, and we talked about yesterday, it doesn't matter because no one fucking cares. No one cares that none of this stuff is worth anything. They just keep buying it. U.S. government debt. What? You're buying into $37 trillion of unsustainable, unreturnable debt. It will never get paid back. Even Jerome Powell said that. The debt will never be paid off. That's the guy that runs the central bank. It's not a central bank. That's the guy that runs the Fed, that claims to be a central bank. He's the top banker in the U.S., although Jamie Dimon would argue. And Jerome Powell said on 60 Minutes, it will never be paid off. Then what? People are dumb, man. They just do not care. Facts don't matter. They do not. Once you wrap your mind around that, you will be really way better off in investing. Anyway, David Sachs, Trump's top advisor on crypto and artificial intelligence, said, it's a weird thing, that the administration expects a stablecoin bill to clear the Senate with bipartisan backing. We have every expectation now that it's going to pass, they told CNBC yesterday, following a procedural vote that saw 15 Democrats join back with Republicans to clear the filibuster threshold that Maxine Waters and the idiot known as Elizabeth Warren were trying to create this blockade. And basically common sense was like, listen, you stupid Karens. No offense, guys can be Karens too. We saw one last night, guy wearing leather sandals, going out to eat with his wife in a Tesla, hitting the curb and everything. Like there are male Karens, but Maxine Waters and Elizabeth Warren are the female Karens. And these Karens were trying to everybody slow down. No, don't let them do this. Don't let them shut. And to which most everybody else is like, shut the fuck up. Just shut the fuck up. Get out of the way. Anyway, so they beat the filibuster. The Genius Act stands for Guiding and Establishing National Innovation for U.S. Stablecoins. Genius! Double entendre. You're welcome. It is the most advanced federal effort yet to establish a legal framework for dollar-pegged digital assets. Sachs says the bill could trigger trillions of dollars in demand for U.S. treasuries by unlocking stablecoin growth under clear rules, which makes me think more about Ondo. Because if people are buying treasuries, what does a person do with treasuries? You flip them into repo to make more money is what you do with treasuries. So, yeah, why get paid X when you can get paid X plus Y? Why indeed? So, does this help the repo market? Yes. Does it help liquidity if there's a liquidity crunch? Yes. Is it another money printing counterfeiting machine? Yes. Will any government agency be able to properly audit these companies? No way. They can't even do it with Tether, and Tether has been here the whole time, and it's obvious. It's an obvious fraud, and no one cares. Why? Because Tether said we will keep buying treasuries, to which the U.S. government said, fair play. You know what? Run your fucking money printers. We don't care. We run our own. So you got yours, we got ours. Anyway, currently there are already over $200 billion worth of stable coins, but it's unregulated. So what Sachs is saying is that if they can provide legal clarity, it will create enormous demand for treasuries practically overnight, which I mean, yes. And so the stablecoin bill's progress now comes down despite controversy surrounding the Trump family, the little dinner thing that they just had where you can buy yourself a plate, whatever. Critics raise concerns that the administration benefits from the legislation. Oh, I think that's funny. Congressmen and senators saying that it's not fair that the administration benefits from the legislation. They trade illegally on inside information every fucking day of the year. They have the gall to point their finger at the administration. Get off the gas. A bunch of fucking crooks. We're allowed to steal. They're not allowed to steal. No, they can't. We can steal. We steal everything. This desk, taking it with me. Come on, man. God damn. Anyway, a crypto firm, World Liberty Financial, which they say is tied to its own stable coins, but it doesn't matter if what, and I know no one wants to hear this, but if what Trump is doing with his weirdo family isn't illegal, it doesn't matter. It's not fucking illegal. Like the shit that congressmen and senators do all fucking day. Nancy Pelosi, fucking crook. Like, these people made a whole fucking career out of pulling scams and insider trading and taking fucking giant envelopes full of money. Fucking scumbags. And they have the audacity to fucking look down their nose at people that are doing it right out in the open. Fuck you. Anyway, sorry. I had to get some F-bombs out. That really irks me. You want to get really mad? Anybody here want to get as mad as me? Even, I'm not really mad. But anybody here want to pretend that they're as mad as me, even if I'm not really mad? Go look up Nancy Pelosi dodging questions about insider trading, you'll find a lot of things. She has been called on the carpet, and she always just goes, oh, well, have your senators or congressmen change the rules. She doesn't say she doesn't do it. She almost admits to it. She's like, well, it's not illegal. Bitch, that's why I'm asking you. Are you not a senator or congressman? Aren't you the person we're supposed to ask? Oh, it's not me. Fucking bitch. Anyway, God damn. It's the P's, man. It's Jerome Powell, Nancy Pelosi, and some other P words that really get me angry that I can't even think about right now. I'll think of them. What's something else starts with a P that I don't like? Pension fund managers. Yeah. Jerome Powell and pension fund managers and Pelosi. That really grinds my gears. All right. Sachs, who disclosed the sale of $200 million in crypto-related holdings before joining the White House. Again, it's a guy who's already rich. He's not there to mine. He's not there to mine the political system. He's already rich. And this is another thing that these cunty politicians don't. They're like, you guys are rich because you cheated. This guy's rich because he's an entrepreneur. He's coming to tell you how it works in the real world because, again, you guys cheat and fucking steal an insider trade, and you think that's a fair career. You go home and you walk through your caucus, you see all the people that voted for you, shaking hands, kissing babies and shit, fucking crook, pulling wallets out while you're doing it. Oh, those P's, man. Those P's grind my gears. Anyway, he declined to comment on whether the president or his family may financially gain from the bill's passage, but it doesn't matter because the bill sets up a legal framework for how stablecoins can work. A legal framework. If you get rich underneath a legal framework, it's legal. You're allowed to be enriched by a legal framework. That's why they do it. That's why they vote on it, man. Our elected representatives. Anyway, despite all the momentum, final passage is not yet guaranteed. Josh Hawley has recently added a controversial provision to the bill that would cap credit card late fees. Probably should be a thing because it's getting out of hand. Anyway, a move that could cost the legislation support from some in the financial industry, meaning politicians that have their back pockets lined with people in finance or MasterCard, Discovery, all these, scumbag predatory lending facilities. Yeah, those. Anyway, obviously they don't like that because they want to be able to take your fees to 12 trillion. So anyway, banks are panicking over the idea of yield-bearing stablecoins. In a May 21st post titled "The Empire Lobbies Back," New York University professor Austin Campbell said that the U.S. banking industry is panicking over the rise of yield-bearing stablecoins, which threatens their profit model because when you're a bank and you offer people 3 basis points for their fucking money and they can go get 500 basis points by parking their money in USDC, most people, if they knew that, would tell their banks to go fuck themselves. You're giving, dude, I'm not kidding. You know how much I get paid for my money that sits in Morgan Stanley, their sweeping account, 3 basis points. 3. Not 3%, not even 1/3%. 3 fucking basis points. It's 100 basis points is 1%. 3 basis points. You know what they lend it at? Dude. God damn. That's anyway. You know what? It's another gripe for another day. That's another gripe. I got to think of some way to put a P on banking. Anyway, so banks are obviously panicking, as they should be, because they don't offer any service. And they charge you for the service they do offer. Oh, if you keep $250,000 here, then we won't charge you $15 a month for banking. Motherfucker, do you think I would let Chase hold $250,000 that I can't use to save $15 a month? Listen to what the fuck you're saying. I had to check a dude on this a few weeks ago and I was sending a wire out. He goes, if you just left the money here, I go, why on earth would I leave you guys $250,000? Well, You get free wires. I don't need your fucking wires. They cost $25. Whoa, but you also get free banking. Oh, $15? You need me $15? Cool. What are you doing with my $250,000? Oh, you're relending it, huh? At what rates? At your bullshit exorbitant lending rates, 7.3, 7.4, 6.8? Fuck you. Like, it's mind-numbing. Okay, cool. Pay me half. I want half your juice, bitch. Pay me half what you're lending it at. You're lending it at 7 to some homeowner? Cool. I want 3.5 of it. Motherfucker. Fuck you guys. Anyway, I've dropped some F-bombs today. Feels good. Feels real good. I got this caffeine. It's the combination of the alpha brain and the caffeine really makes me curse. You know what else makes me curse? My brain. Okay. Banks want you to protect their cartel so they can keep screwing the voters, especially younger voters. You know, the ones that just swung hard to the right because you supported the pro-banker bonus anti-crypto army over them. Great. Why? And this is coming from Austin Campbell. Okay, the based on that article, he said, to use an example from before, the current model of many banks, and I will say that there are some banks that are far better than this, but these are mostly like provincial banks. But the basic banking model is a bank takes your money, lends it out 9 times, collects a high percent times that 9 times, and pays you some embarrassingly low stipend against that. And in my case, it was 3 basis points. You guys saw Citi just got hit for almost $500 million in fines because they actually had a reported rate that they were supposed to pay people for the savings accounts about 4 point. This is their wealth people, their wealth clients, 4.5 or 4.6%. They were giving them a third of a point. Just a total fucking fraud. Of course, they got busted because they're not clever. It's Citibank. Now they're paying back $500 million. They should be going to fucking prison, but they're not. They're just going to pay back a fine. You go steal $500 million and see what happens. Go ask scam, bank run, fraud chicken. Go ask fucking Alex Mashinsky. How's that working out? Anyway, well, he'll have 12 years to get back to you. Oh, man. So banks are, unnecessarily, well, not unnecessarily. They are necessarily scared, as they should be. All right. Let's go remind me later. It wants to do these forced updates all the time, but I guess that's good. Okay. Really quickly, Ray Dalio says the Fed should not cut rates. No. Matter of fact, I'm going to put a little cool picture because there's a very colorful picture of some money units that are very colorful. I love it. I like the color. I'm a colorful person. Always have been. That's what people say about me. They say that guy, he is very colorful in the words that he uses. Sometimes he says the F-bomb, sometimes the S-bomb. It's hard to say. Hard to say which one he's going to choose. Anyway, billionaire investor and founder of hedge fund Bridgewater Associates, Ray Dalio, thinks that it's not yet time for the Federal Reserve to ease U.S. monetary policy. In a new Bloomberg interview, Dalio says the Fed should not cut interest rates, despite the pressure to do so, and the fact that all of the information, all of it, 100% says they should have already cut. But again, based on the way they say they cut. Again, we base all this on what the Fed says. The Fed gives us the rules by which they operate, and then they don't follow the rules by which they operate. Anyway, Dalio says that over the long term, the current Fed Governor Jay Powell's term ends May of 2026. The Fed could, however, end up cutting rates due to political pressure. There's a great deal of uncertainty and there's deterioration in sentiment. But really, the actual economy, it's bad, man. It's pretty bad everywhere you look. I don't know that anybody can paint a rosy picture at this point. I think that's over with. But I think it's kind of like, I think Ray's position is like save your firepower. But that problem there is that's then assuming that firepower has any merit. And rate cuts don't matter. They don't affect the economy in any way at all, other than some speculation and some psychology. And I guess that there is some merit to that, but this is all political theater. None of it is real. There is no actual in the data change to an economy based on rate cuts. anywhere, in any economy, anywhere in the world. It's not just the Fed sucks. It's rate cuts are inept. They just do not work. They've never worked. There's tons and tons of scholarship on this. Zero effect. Anyway, whatever. So the Fed are in an obviously difficult position. Ray said, I think that when we look further out, we're dealing with the political aspects. I think that when there's a new Fed chair, there will likely be more inclination to cut rates because it's an old story of conflict between those in power, political power, who like stimulation, and because of the enormous impact of interest rates on debt service, and because debts are so large, there's going to be pressure that way. Yeah, that's the other thing. Debt service becomes more expensive and more unsustainable the longer rates are held high. And so the Fed is not just sticking it to the man psychologically, he's sticking it to the man indirectly. The Fed F's the taxpayer by not reducing rates, making debt service higher, running ever increasing debt, like government debt. Like that, don't they understand that this leads to debasement and shit? These guys, they never play it out, man. Anyway, according to Dalio, the aggressive easing of U.S. monetary policy could negatively impact the bond market. My guess is he's balls deep in the bond market. Dalio said, I think the markets, if they were to see too aggressive of rate cuts in monetary policy, too inappropriate cut, that would actually be bad for the bond market. He's saying the psychology of it, but they should have already cut. And again, the cuts don't matter, but based on their rules, right? So he said, watch the yield curve. As you get rates rising by long rates, and you have also at the same time, let's say, movement down in the dollar and rises in gold, that kind of dynamic is reflecting a movement out of bonds because the value of money matters a lot. No, he's wrong. It's, oh God. Even old Dalio's got it, can't get it right. Yeah, we'll do another day. We'll talk about bonds, like the what the yield curve is really telling you and what it's not telling you. He's just got it wrong. There's no lack of participation in the bond market, right? People get out of bonds not because they have no faith in bonds. It's because they fucking need cash. It's because there's a liquidity crunch, and when there's a breakdown of cash, credit, or collateral, 3 C's. Hey, cash, credit, collateral, in quality cash. Okay, quality collateral, cash, credit. When those break down, you go into deflationary environments, and there's a lot of little kind of like side effects and symptoms of all that kind of stuff. But so he's reading the tea leaves wrong. He's reading them wrong. Now he's done really good because you can be wrong and follow the trend and do quite well. And so good for him. I mean, he's a very sharp guy. I just think these guys, a lot of these guys get it wrong. They're too steeped. They're too steeped would be stooped. They're too steeped. It's too ingrained. This old 1964 kind of Keynesian bullshit. It's too much in them. They cannot let go. They just can't. Anyway. Okay. And then the final note, SUI-based CETUS protocol suspends operations following CETUS. Anyway, it's a stupid name for a stupid protocol that lost a lot of money. Following a $260 million Oracle exploit, which may or may not be an inside job, probably is an inside job. The CETUS exploit caused a drop in the SUI ecosystem token price, affecting user confidence and liquidity providers alike. CETUS protocol, which is a decentralized exchange, DEX, operating on the SUI network, has suspended its smart contract operations after a serious security breach. The platform confirmed the exploit on May 22nd through its official X account, noting that the shutdown was necessary to prevent further losses. Well, shit. The alert announcement was, there was an incident detected on our protocol, and our smart contract has been paused temporarily for safety. Well, they paused it after $250 million was gone. So they didn't just get right to it. It wasn't like an alarm went off. They probably read about it on Twitter, and they were like, wait, is that true? Hey guys, go look and see if that's true. It is true. Or more rather, that same group of people was like, oh shit, dude, they know, they caught us. Okay, freeze it. They caught us, freeze it. We already got $250 million. We line our fucking pockets. These idiots. So that's where we're at. Their team is investigating the incident at the moment, and a further investigation statement will be made soon. We are grateful for your patience. That's the part that bugs me. We are grateful for your patience. Fuck you. We're not patient. You're stealing our shit, either through ineptitude or just straight criminality. Man. Blockchain analytics firm Look On Chain revealed that the attackers drained over $260 million from the protocol. The stolen assets are reportedly being swapped into, like this, USDC and Ethereum, where they have been exchanged for Ethereum. I knew it. The hackers are long Ethereum. Hell yeah. This is good. This is good for Ethereum. Anyway, Look On Chain reported approximately 60 million in USDC. Notice they didn't want USDT, did they? No, because USDT is bullshit. They wanted USDC. It had already been transferred across chains at the time of reporting. Data from DeFi Llama suggests that steep drop in the platform's total value locked fell by more than 200 million to around 75 million. Meanwhile, Cetus Protocol's native token, Cetus, plunged 24% to 15 cents. It should be zero. Why is it worth anything, man? The exploit also triggered a broader sell-off in the Sui ecosystem, with 711 Sui-based tokens registering losses of 5% or more. Yes, of course, this is just the way it is when these kind of things go out. The stolen funds mostly belong to the liquidity providers of the DEX, but this also caused a lot of Sui token prices to crash, affecting normal users as well. The Sui token itself seems to be holding up relatively fine, only down slightly for the day. And they'll do after action, all this kind of stuff. They're calling it like a decimal error and bullshit. CTO of Web3 security firm Hack and Proof explained that the attackers likely used a near zero liquidity injection to manipulate the pool's internal state. This allowed them to extract value like Sui and USDC tokens without contributing real assets. So they basically just pumped fucking hot air into the liquidity pool. He added, check the math behind add liquidity and remove liquidity and swap functions, especially where they compute token ratios, small round values, and handle tokens with decimals equal to 0 point something. The Cetus team said, no, we have not been hacked. We've detected a bug in the Oracle. Fellas, that's what a hack is. You fucking geniuses. That is a hack. Someone found a bug, probably you guys, and pilfered the pools. Probably you guys. And even if it wasn't you guys, that's a hack. That's what that is. That is another backdoor. It's not, it's just a coding error. Oh, really? Oh, it's a coding error, huh? Just a little whoopsie. Just a little $250 million whoopsie. Whoops. Can you imagine you have a $250 million? Someone's like, hey man, my bad. I lost all your money. What do you mean? It's right there. No, yeah, dude, I made a bug. I had a bug in the system. There's a little bit, it's no big deal. It's like a little bitty 0 dot bug. It was like a little nothing. Some dudes pumped some hot air into my bank account and then what came out the other side was all of your money. What about your money? No, my money's fine. It's your money they got. That's the unfortunate thing. But you know what? It's a bug, right? Well, we appreciate your patience. Okay. Appreciate your patience. Fuck you. Oh man. You can't listen, man. You can't make this stuff up. And if you did, people wouldn't believe you. So that's where we're at. And on that note, let's see, answer your time decay question. No, we've already done all the questions we're going to answer. We've already answered all the questions we're going to answer today. We answered questions for 40 minutes. We did news for 30 minutes. Your cup runneth over. You know what, Dr. Cutler? We appreciate your patience. All right. And on that note, stay in school. Don't do drugs. Don't do anything my poor and solvent drunk, starting on meth grandmother wouldn't do. It's very little. We will see you tomorrow, or if anything fun and extravagant and exciting happens. But look, man, Bitcoin is in price discovery. This is fun times. This is good times. If you're not enjoying crypto now, when would you? When could you? And don't get FIAMO, right? Don't get FIAMO. Fear that you've already missed out. You haven't. It's all about return on investment, baby. Return on investment. Bam.
Killing time, no place to go. Everybody's feeling low. All alone in the street like glow. You fall into your head. It's all that you want. It's all that you need. Take some time to make believe. It's all that you want. It's all that you need. Just some time to make believe. It's all that you want. Time, no place to go.